Welcome to the 7th episode of Portfolio Update. Today is a special episode because the reason why I started this channel is finally here. The whole reason of starting this channel was to show you guys and probably help in some way that ups and downs are a part of investors' journey and you should stick to your strategy and stick to your ideas that you have formulated after years of reading and understanding of finance. This also means that you should stay away from trading, which was like 3 to 5% traders only making money. And doesn't matter what you think about yourself, it's difficult to be 3 to 5% of any expertise anywhere. But at the same time, if you think trading is good for you and you are already doing it successfully, then more power to you. Keep up the good work. If you go back and check out my first portfolio update, which is the first video of this channel, then you will see my portfolio being down to some 40 to 50%. And at that time, people were saying that it will go to zero. And then the journey continues and I kept buying companies whenever the price went down, and it really helped me in accumulating good number of shares before market starts going back up again. I kept my cool throughout the one of the worst global crisis and kept eyes closely on these companies and stuck to my idea of investing. And now finally the portfolio is in black. And overall I'm very happy with the price at which I got in these companies. Reading about Warren Buffett throughout my life, it was always my desire to be able to go through the market crash and buy as much as possible and take advantage of the crash as Buffett took himself many times. Main idea is that the market will keep going up and down and that you should not change your idea of that company. If you have done your analysis and understand the concept of investing, then go ahead and do your investment and hold it patiently. Today in the episode of My Money Universe, we are going to discuss the idea of Mr. Market, introduced by the father of value investing and Warren Buffett's guru Benjamin Graham, which will help you in understanding the behavior of a stock market and how to sail through it and make tons of money from it. Then we will see what the biggest investors are saying about the current economic situation of our country and where it's leading to. Then we will take few questions and comments from you guys and give my thought on it. But first of all, we will go through my portfolio. Okay, so market seems to be going up and this is the case in other countries like US, UK too. Last few months have been called one of the greatest runs by the market and people who have put their money in these times have made a lot of money. Shankar Sharma of First Global Investment Company explains it the best. Let's hear from the guy who has expertise in not just investing in India but all over the globe from decades about what did he do in the downturn events of this year. Did he buy like me or sold it all?
Yes, I think your question has been asked by millions of investors, including some very, very experienced and seasoned investors. For example, Warren Buffett, has not bought a single share in this whole bear market after having told us from the time we started our careers that you should be greedy when others are fearful. That has been his mantra, but he has been very, very fearful and he has missed the single best rally in a 4-month period that we have seen in the last 10 years. The last time we saw such a rally was in 2009, April, up until June, almost the same time period. After that, this kind of sharp rally has happened only now. And even a person like Warren Buffett has missed it completely. I know of so many large funds, large institutions who have just been flabbergasted by this whole rally. And so your question is the very valid question. But again, to back up a bit. So in February, around I think February 20th or 25th, around that time, I was sitting in a Nariman Point office. We were looking at all the systems that we have built over 23 years of investing. Because we are a very system-driven firm. You might think that I come out and make a big prediction, but none of that is actually just a brainwave. It is all coming out of a lot of data, a lot of analysis, a lot of science. It is not a, कि suddenly, दिमाग की बत्ती जल गई हमारी, कोई thought पे. So we were sitting, we were looking at everything, and it just came from the data all around us that we were heading into a lot of trouble. And by that time, actually, if you go back, February 2025, say you could have easily seen that this problem was a serious problem. It was not as if it was hidden, right? If you went to Twitter and saw the tweets of major experts in this field of virology and all that, it was that it is a serious problem. By that time, Italy had already started to have this major kind of, pandemic problem. when we saw that, and then we saw every single indicator, every single data point that we see, it came to us that we are going to have a problem. So immediately we moved away from equities into fixed income, into cash, and within 15 days the whole world collapsed completely, right? As a result of having made that shift, we hardly were down in February and March. So we maybe lost 5-7%. That is nothing compared to a 30-35%, 40% fall. That almost every fund in the world, including Ray Dalio, etc., everybody was wiped out, in the month of February, and particularly in March. We managed to sidestep that. But by March 22nd, 23rd, in fact, I tweeted about it also, that we think now this is going to be back into the sort of bull market territory, and that's when we shifted completely from cash and fixed income back into equities. From that point till today, it has been a one-way bet. Okay, I mean, frankly, this last 3-4 month period has been one of the smoothest rides possible that I have experienced in my equity investing or trading career. So to answer your question, there is no disconnect between the stock market and the reality. I'm saying the opposite of what everybody, including Warren Buffett, believes. I'm saying you're not looking at the composition of this bull market. The composition is winners are running up, losers are falling down. What is wrong in that? That is the way markets are supposed to be, isn't it? So it is not an illogical rally. It's the most logical. I mean, I have been around 30 years. It's probably the most logical rally I have played in my whole life.
Now, many investors have been calling this rally as the rally of survivors, and it is the case in not just in India but Taiwan, China, US, UK and many other countries too. So what happens in this kind of rally is that the few strongest companies shoot up because of extra liquidity and because people want to be secure, and hence it raises the price of these companies to multifold. Surely this pricing is not based on the earnings or the future growth of the company, but just about who is going to survive in the future if the same kind of calamity happens or if the present situation worsens further. So investors are of kind believing in the current prices even though the economies all over the world have taken a massive hit because of pandemic. I kind of understand the logic here but can't agree with the whole idea. Let me explain this. So I agree that in times of panic people are shifting towards the survivors, and in my investing style I have already included that, and that's one of the reasons behind some of the investments I have done here. But I don't think this price will stay like this for too long. Remember, here we are talking about whole market, so Sensex and Nifty basically. I think in time with coming numbers of NPAs and slowing down of economy, we will see some downfall again for some time. And I'm saying sometime because I feel if the market goes down, it will be for a very tiny time period. I'm quite optimistic about future, and it shows in many lakhs that I put in portfolio this year, as you can see. So according to me, for a while the losses due to lockdown will match up with the stock market. It's not gonna be as brutal as what we faced in starting of this year, but still it will go down a little from current level. I really think it will take us at least 1.5 years to get back up on the normal growth and make the market hold its ground solidly on the actual pricing based on the economy and growth, and not just on the optimism of future. Now, having said that, I don't really consider all the market going up and down in my investing. I focus on that one single company and try to analyze to whatever level I can about the future of the company and then invest. So for me, market indexes don't really matter much. If it's on me, I would prefer market to fall down further so I can start picking my favorite companies in much cheaper price. As I have mentioned in previous chapter that I want to increase my holding in Suntech Realty to 9% of my portfolio, but because its price shot up, I'm unable to buy it at a good price now. But that buying of Suntech has been very good for me. As you know, that investment of 53,000 purchasing amount in Suntech is coming from the profits of selling LT Foods on almost 100% profit. And after putting that profit in Suntech Realty, it's again up 43%. And I would prefer Suntech Realty over LT Foods any day. So this 76,000 of current amount that you see in Suntech as of current value was actually an investment of around 25,000 rupees that I made last year in LT Foods, and then shifted to Suntech. You can go back in previous portfolio updates in my channel and see how the whole journey turned out to be. I'm waiting to see how the company is putting its feet forward and whether prices come down, and accordingly I'm keeping 50,000 rupees on side to put in Suntech whenever the opportunity knocks on the door. Same goes for Rain Industries. If and when price go below 80 rupees, I will buy more, otherwise I will just let it be. As of now, there is no other company that I'm planning to buy more into until unless something changes. Prices have gone up and I want to put money in one of my business to grow it further, so I'm holding on to investing more money right now at this price. I'm not selling LT Foods in near future. Only company I want to sell is GVK maybe. It all depends on how the management handles the current situation. I have given my idea of GVK exit in last portfolio update, so I'm not going to repeat it. So the update is that Adani might be buying the Mumbai airport from GVK, and that will give GVK some cash to pay off the lenders and take a breather. But if this happens, I might sell it completely anyways. Even though Repco is down some 45%, I still have confidence in this company. They have headwinds to face in near future. As the moratorium period ends, NPA numbers will start coming out, and then we will get to see how bad it is and how the company has been planning to recover from that. But overall, I have no plans to sell at all. Vabag is down still, but it has shot up like 300% from its low of 73 rupees, and now it's just 12% down from my buying point. They are handling situation well and have steady contracts coming in for many next years, and I'm quite confident about this company too. They have just raised 120 crores from some big investors and 80 crores came from Rakesh Jhunjhunwala himself, which will give investors more confidence in the company. See, this company is a great example of how an investor should handle the meltdown of market. When it went to 73 rupees, everybody was telling me to sell it. But thanks to Warren Buffett and millions of articles and books on him and his investment journey, I did not panic and stayed on my philosophy of investing. This does not mean that I won't be losing money in any of my investments. As mentioned before, investors lose money 30% of the time, and I'm gonna do in the future, but because other companies do so well and hence the portfolio keep rising. So make sure in times of panic you need to stay calm and not get emotional about your investments. One of the ways I held on to my investment ideas in such panic times is through understanding of market behavior and how it works. So today I'm going to tell you guys about it. This concept of Mr. Market was introduced by father of value investing, Benjamin Graham, and it helped Warren Buffett in accumulating billions of dollars that he has now. Before that, if you guys are liking my videos and it gives you some value in life, then please press the thumbs up button so it can reach to more people, and this will be a big help to this channel and growing. Nobody else on YouTube is showing his value investing portfolio this openly with all its flaws and errors. So just so that you guys can learn something from it. And it's all free. So it seems reasonable that you guys too will help me out by pressing the thumbs up button. Okay, back to Mr. Market. Mr. Market is a character created by investor Benjamin Graham to describe what he believed were the irrational or contradictory traits of the stock market in his 1949 book, The Intelligent Investor. Basically, imagine our Sensex and Nifty as to be this person whose name is Mr. Market. By the way, if you guys haven't read this book, then I highly recommend this one. This is like the Bible for all value investors. Mr. Market is described by Benjamin Graham as a fickle investor primarily ruled by his emotions from day to day. Imagine you own a business with Mr. Market and your partner frequently offers to sell his share of the business or to buy yours depending on how he is feeling that particular day. Like the China standoff happened at the border and suddenly he wants to sell all his shares to you. But then talks happened between armies and now with a U-turn he wants to buy all your shares. Basically for Mr. Market, the estimate of the business's value goes from very pessimistic to wildly optimistic, and you are always free to decline his offer since he will soon come back with an entirely different offer. Business is same but with mood swing value of businesses going up and down in Mr. Market's head. And that's exactly how the stock market works, from extreme panic to extreme optimism. One of the lines that you will hear from many genius investors repeating in their speeches is, "Market is here to serve us and not guide us." This is by Benjamin Graham from this book. What does it mean really? That the current price of the stock should not tell us whether our investment was good idea or bad. Do your analysis and don't sway with the current pricing of the market. And one more time, don't be emotional about your stocks. These theories helped me a lot when my portfolio fell down to almost 50%, and I hope you guys too will get help from it. From 50% down, we have seen my portfolio coming up to positive returns in last 3 to 4 months, and this kind of sharp shoot was surprising for some and for some it was not. So let's hear from the expert what he thinks about the stock market surging during an economic slowdown.
why is the stock market going up while the rest of the economy seems to be heading in the other direction? Let me give you some context. Rating agency CRISIL had originally said that India's GDP loss would be almost 4% thanks to COVID-19. Later, it said that India would lose almost 10% of its gross domestic product or GDP or economic output. So the fact is that the economy has and will contract in the rest of the year. This is also, as CRISIL said, the first recession to be driven by losses in the industrial and services space as opposed to earlier times when it was driven by agriculture. Now let's look at the stock markets. On the 23rd of January, the Sensex, the Bombay Stock Exchange Sensex, stood at 41,386. On the 23rd of March, it stood at 25,981, a dramatic fall. But on the 21st of July, which is where we are roughly, the Sensex is back to 37,907, a dramatic recovery once again. So why is this happening? So let's put that question instead to Saurabh Mukherjee, founder of Marcellus Advisors and a very active and insightful stock picker and market watcher. Saurabh, thank you very much for joining us.
Pleasure. My pleasure, Govind. Thanks for inviting me.
So Saurabh, the first question really is, why are the stock markets going up while everything else seems to be heading in the other direction?
Stock market rarely looks back. The stock market exists to look forward, right? And stock prices today are not meant to indicate what's happened in India yesterday or last week or last month. Stock prices in India and everywhere else in the world are trying to discount the future. Now let's just think of a typical stock and just do some basic, just think of a typical framework for a typical stock. For a typical stock, the stock price today is basically equal to the profits over the next 20 years, right? At least in very simple terms, the price of a stock today is the next 20 years worth of profits, right? Now, let's assume due to COVID, let's make an extreme assumption that due to COVID, one year out of those 20 years profits has wiped out, right? And therefore, you're left with 19 years and you should, rather than being worth 100 rupees, the stock should still be worth 95 rupees, right? And therefore, at most, if you're extremely concerned about COVID and you believe the current fiscal profits are going to be wiped out, at most you can justify a 5% correction. Back in March, if you remember, Govind, back in March, the market had corrected almost 35%, which was ridiculous.
Extreme panic without waiting for first to grasp what has gone wrong. And Saurabh Mukherjee is one of the best minds we have in our country, and him explaining it just shows how important it is for your investing life.
Right, which was a simple way for anybody to understand that the market is overestimating the impact of COVID. People were panicking needlessly. Now, interestingly, the correction, if I calculate it from 1st January to now, the correction is actually 5% odd. From 1st Jan to now, we're down around 5% odd, which is exactly equal to what it would be if COVID wipes out a year of profits, right? So COVID wipes out a year of profits for our country, which I think is the extreme worst case scenario. The stock market should correct around 5%, which is broadly what it's done so far, right? But there's actually a more optimistic way to think about it. Typically in our country, we only have economic booms when America goes into recession. We've never had an economic boom in India without a US recession. Typically, America goes into recession in year T. In year T+1, India's boom begins, right? In fact, an American recession is a fail-safe indicator of an Indian economic boom in T+1. This happens due to two reasons. American recession brings down the price of oil by 50 to 80%. Obvious, world's largest consumer of oil goes into recession, oil comes off by 50 to 80%. It's happened this time as well. And an oil price correction of 50, 60% gives us a boost to our GDP of around 3%. Right? We've received that boost. The government's fiscal largesse was basically the oil relief passed on to the more needy sections of society. Second reason is when America goes into recession, the cost of money falls globally because the US 10-year bond falls by 2 to 3%. This time as well, the US 10-year bond is down by 3 percentage points from Jan till now. That has allowed the RBI to cut rates by 2%. I think there's another percentage more of rate cuts that the RBI will expedite in the remainder of this fiscal. And therefore, cheap oil and cheap money, they are the only drivers of economic booms in India. They're upon us, and therefore the odds are actually quite high that over the next 2, 3, 4 years, we'll have an economic boom. Once you start thinking like that, you start realizing why not only will the market recoup the COVID losses, as we go further into the unlock, as we go towards Diwali, there's actually every possibility the market will rally quite strongly as the market starts sensing an economic recovery in 21, 22, 23, so on and so forth, right? So stock market's job is to look forward, not to look back. In that regard, COVID is actually a quite easy shock for the stock market to calibrate, which is why the swiftness of the recovery from the March lows.
So according to Saurabh, the panic was exaggerated, of course, and now investors are coming back as they get somewhat clear picture of what is happening with the economy. He himself was buying throughout the meltdown and had accumulated good amount of stocks for future at cheaper prices. Overall, most of the investors are saying that by 2021, India will start with its fast growth and then economy will really shoot up. So the future looks bright, though of course there are going to be some bumps in between. Okay, let's take some questions and comments that you guys have been posting on my channel. If you have any question, then please post it in the comment below. I answer each and every question as best as I can. So Nihal Mehra says, VTech Vabag has gone down so much already and I think it is just going to fall further. Why do you still have that in portfolio? And by the way, thank you for advising me last time to not sell LT Foods in panic at low cost. And now I am up over 130% from that time. You saved my ass. First of all, I want to say thank you to Nihal for his kind words, and LT Foods is a good company to own and I myself hold some. He has asked a very good question which totally relates to the theme of this 7th portfolio update. See, this question is from 2 to 3 weeks back when Vabag was down to some 110 rupees somewhere, and it has been going down since the highs of 700 rupees from 2017. My buying price is 260 rupees and right now it is priced at 227 rupees. Now let's pause for a while and ask yourself this question. When you see the price right now, do you still feel this strongly about this company falling further as you felt when the price went down to 73 rupees? You can pause the video and think for a while. I'm pretty sure that your feelings are a little milder now. This is exactly where Mr. Market theory that we just discovered come handy. It's very normal that when the prices fall down 30 to 40%, in this case over 60%, then you feel you're gonna lose money. But you need to make sure that you're acting rationally and not being emotional. As Nihal did not offer any logic behind his feelings for Vabag, so I cannot talk about it. But mostly this fear of losing money comes from the falling prices. Most important thing here is that you should focus on your own analysis because of which you bought the company in the first place and not go with the market going up and down. Next question is about Edelweiss. One is from Rishabh Golati. What are your thoughts about Edelweiss selling its advisory business? Really appreciate your honesty the way you show your wins and losses. Thank you, Rishabh. So we're going to combine this Edelweiss question with another Edelweiss question, and that is by Gaurav Vimal. He writes, I'm heavily invested at Suntech. It was priced below the inventory. Amazing buy, haha. Well bro, even I'm learning investing through lots of books. So I'm just curious what made you buy Edelweiss. I couldn't understand their business and couldn't weigh. If you can help me, it would be amazing. So first of all, Gaurav, it's great that you're educating yourself through books and that you bought Suntech at below inventory level. I really love the company and management is also very clean. Hopefully you will make good money from it. Now to sum up answer for Rishabh and Gaurav, let me tell a little about Edelweiss. So Edelweiss has 3 segments. Credit business, from where they lend money to corporates and retail customers. They have been selling their corporate portfolio recently and have plans to make it to zero and increase the retail side of it. This will improve the consistency of business and the risk level is also gonna be low. Then the second segment is advisory business. This is a segment which comprises wealth and asset management businesses. This is one of the best kind of business to own. Here you are investing in optimizing other people's money and getting the commission for that. So basically the business needs almost no capital apart from technology and hiring people. They have been consistently working towards increasing this segment and are one of the best in the game. They help not only just people in this but also the biggest corporations in all kind of merger and acquisitions. Third segment is the insurance business and this is the newest segment for them. In this they have done a tie-up with the Japanese company. They will still take some time in making this profitable. So these are the 3 segments Edelweiss conducts its business in. They have been recently selling a part of its segment and some of the people like Rishabh here are feeling a little worried about that. But there is nothing to worry. Edelweiss is trying to bring in sophisticated partners who are not only just putting their money in business, which by the way give Edelweiss a lot of liquidity and make its book solid, but the partners are also bringing in expertise which will further help Edelweiss in capturing more pie in the market. So I hope it helps you in understanding Edelweiss business. One more thing I want everybody to give attention here is that some comments I'm getting where people are saying they copied my shares and made money and all, or they just executed some buying or selling because I did the same. So I want to say here that please do your own analysis before putting your hard-earned money. I'm just a guy on internet and there is no way you should blindly follow me. I'm no expert and don't even claim to know much about finance. This channel is to openly show my stupidities and maybe help you guys in improving your life a little if I can. On that note, remember, investing is like a moving star in the sky. Be calm, be relaxed and focus on the journey, not the clouds you are getting stuck behind for a while. Signing out, My Money Universe.